on production of ethanol from sugarcane juice. Meanwhile, Z cracks more than 3% as the company is likely to miss merger deadline. Top boss requests for an extension. And ITC is down by over 1% as its largest shareholder, British American Tobacco, mulls reducing its stake in the company. A host of IPOs hit the markets today. Muthoot Microfinance, Moti San Jewelers and Suraj Realty Developers launched their IPOs today. A total of 3,900 crore rupees worth of IPOs are being launched this week. Well, those are the top headlines we are tracking this morning. The markets did open up with a gap down, but we've given up, or rather recovered from some of those early losses. Agam, we were expecting it to be a day of consolidation, but any sort of weakness seems to be getting bought into. Yes, you're right. In fact, and at the moment, we've in fact moved up to a certain extent. For a moment, we in fact saw the Nifty trade in the green as well. So let's put up what's happening in the futures and options space. Oh, and we are in fact trading in the green at the moment. So there's no relent at the moment. It does seem like we are seeing more gains coming through, and open interest on the other hand is declining, but this is also perhaps on account of some profit taking which did happen earlier on in the session today. As far as the Bank Nifty is concerned, another 1% added towards open interest, even as the spot comes off marginally. So we haven't seen too much change. It is the sideways range-bound movement that we are expecting from the indices, and that's exactly how things are panning out. For open interest change, as far as the Nifty is concerned, again, continuing to see writing around 21,300, 400 and 500 levels as far as puts go, and on the higher end we're seeing a little more writing now starting to be activated around the 22,000 calls. So watch out for that, and this is most likely not just the 21st December but also the 28th December expiries. Let's move on and talk about stocks then. Of course, this is your open interest distribution overall, how things are panned out. So we do have 21,300 put as the one with the max OI on the lower end, and the 22,000 call as the one which in fact gives you an idea about a 700 point odd range within which you can expect the Nifty to trade within as far as this week's expiry is concerned. Now let's talk about stocks. And there you have it. So we'd have longs building up in Metropolis, Zydus Life, MGL, Lupin, along with Ipca Labs. Of course, Lupin in focus on account of the US FDA approvals for two key drugs there. And in terms of stocks which are seeing unwinding in open interest, let's pull up that list as well to see where we are in fact seeing a decline in open interest. So you do have about a short covering in Coforge and Biocon. On the other hand, India Cement, Bharat Forge and Oberoi Realty looking at longs unwinding. On the whole, fairly mixed market when it comes to the broader sense, but as far as benchmarks are concerned, we're most likely to see them consolidate as we move into the next couple of weeks, Meena. Yeah, that's pretty much what it looks like in terms of the F&O and derivative data that we are picking up on. A quick check on metals. If I can just pull up the metal index, it'll help us understand where the action is across the broader markets. There you go. Metals are trading with a gain of nearly 0.5%. Sugar stocks are looking very good. So across the sugar space, you're seeing strong buying that's emerging. Even stocks like Praj Industries, which supply the technology and the manufacturing unit for ethanol, are trading with gains of 6-7% each. So it's an interesting morning where the large cap is lagging slightly behind, but action is across the broader markets with some of the sectors which were in the red turning green as we go along. We have with us two special guests joining us to talk to us about their outlook and their trade calls. Ruchit Jain joins us, and we've also got Osho Krishnan joining us. Ruchit, I'll come to you first. It was a gap down this morning. We were anticipating it to be a morning of consolidation, but it seems like any sort of weakness, Ruchit, is getting bought into on the index at least.
Yeah, hi, very good morning, Sandhya. Well, that's more because the overall trend for the market is positive and we are in a trended phase now. And if you look at the data, especially from the FIs front who have been driving this up move, they started this series with the long positions of only about 36%. But they have gradually added longs throughout the series, and their long short ratio is now almost around 60%. So I mean 60% of the positions are on the long side. And even in the cash segment, they have been net buyers in this month to the tune of about more than 29,000 crore in this month. And whenever there is a combination of cash market buying along with long formations in the index futures, those phases are usually where we see trended up moves. So I think that's the phase that we are going in right now. If you look at the sectoral moves, some of the other sector heavyweights are performing. Earlier it was banking index which gave a breakout, and tested for new highs. Then IT, last couple of trading sessions have been doing well. So I think until we see any kind of important supports getting break, the trend will continue to remain on the positive side. In the option segment now, 21,300 put option has highest open interest, which will now be seen as immediate support. And on the higher side, I think the index still has potential to rally towards 21,700, followed by even 22,000 if you take some positional view. So I think when the market trend is positive, the data is positive, such intraday declines would get bought into. So better to stay with the trend and use any kind of intraday dips as buying opportunities.
Yep, no point fighting the trend. That's certainly the case in this case. But Osho, good morning to you as well. If you could come in on your view on the markets, how are you trading them?
Very good morning, everyone. Well, as Ruchit has already mentioned that overall the undertone is very bullish. So even any dips are auguring very well for the buyers. And even if we will be talking about the derivative front, so 21,300 has seen a very drastic up move on the port writers front. So that means that is expected to be a very strong support zone in the near term. So any dip towards 21,400 odd levels or 300 odd levels should be auguring very well. While on the higher end, I am expecting 21,500 to 700 being a very strong or scattered positions of call writing has been seen from 21,500 to 700. So that is the zone where one could even try to book profits, because already we are in a very overbought position. So we should not be very much complacent in the market and try to timely book our profits on a regular basis. So 21,500 to 700 is the zone where one should try to book their profits on a regular basis, while any dip towards 21,400 or 300 should be auguring very well to accumulate counters and even to buy the index.
Richard, I will talk to you about Bank Nifty in a minute, but just before that, Nifty IT, 7.5% gains over the last 2 trading days. It trades at a 3-year high. Would you go long on Nifty IT right now?
I think yes, stock-specific opportunities could be seen in Nifty IT as well. If we look at the IT's performance along with the broader markets, then I think in the last 6 or 7 months of up move, the IT sector, especially the IT heavyweights, have shown a relative underperformance. Right? And after these news flows of possible interest rates cuts in the next year, which was given by the US Fed statement, I think that brings in positivity where fresh buying interest could be seen in the IT stocks. So that's why if you look at some of the large cap names, HCL Tech has already been outperforming its trading at its 52-week highs. TCS has shown a good open interest built up along with the price up in last 2-3 trading sessions. Even Wipro, which was an underperformer, have started seeing a fresh long build-ups in this stock. So I think these large cap names which were underperformers till late, I think we could see some good momentum which would keep the IT index momentum intact. Levels wise, 36,700 to 36,800 is where we are expecting Nifty IT to head in the short term. So one can look for stock specific buying opportunities. Wipro, as I named it, where fresh long formations have been seen. I think a decent catch-up move could be seen in Wipro in next few weeks.
Osho, I'm going to take your view on IT as well. How are you dealing with in this index specifically?
See, overall, as Ruchit has already mentioned, that IT counters have seen a very strong up move. And this move has seen strong traction in the heavyweight companies like TCS, Infosys, HCL Tech. So from here onwards, still there is potential in IT main heavyweight counters. Even the mid-cap counters are looking very positive. Although from risk-reward point of view, yes, we should wait for some kind of correction or time-wise correction or price-wise correction in the near period. But overall, the structure has changed on the bullish front. So we should wait for some kind of correction on a very strong support zone. We should try to accumulate, because in the previous week, we have seen a strong breakout in the companies like HCL Tech, TCS, Techem is still hovering in the consolidation zone. So we should be very much stock specific in these companies. And for mid-cap IT, there has been a strong breakout. So one should try to wait for the retestment of the neckline. And once there will be a retestment, then again we can look for buying opportunity in mid-cap ITs also.
Osho, what about Bank Nifty? After, of course, underperforming for most part of this year, they've effectively helped the Nifty scale new highs in the last few weeks. Current levels of Bank Nifty around 48,000 odd. What is the target on Bank Nifty and what is the trade on Bank Nifty for today?
See, overall, Bank Nifty as it is at a very crucial zone. 48,000 to be specific is the make or break zone for Bank Nifty. But looking at the overall sentiments, it is looking very positive from here onwards. And one can expect 48,300 and 500 to be tested in the near period. So one should be very much optimistic on the banking counters, specifically the thematic moves that we can see in PSU banks followed by private banks, and even the NBFCs are also contributing in the up rally. So dip towards the zone of 47,500 to 800 should be seen as an accumulating zone, while on the higher end 48,500 should be seen as the immediate target in Bank Nifty. Overall, if we will be talking about the structural change in Bank Nifty, then we are witnessing a flat pattern breakout, for which the target is very high, approximately 49 or even higher than 49,500. But for short-term period, as we have entered the overbought zone, so one should wait for some kind of cool off or correction and then try to have a very stock-specific front for banking counters.
Ruchit, do you mirror the movements of the Nifty with respect to the Bank Nifty? How are you comparing both?
So, Agam, there's no doubt about the trend for the Bank Nifty as well, which remains positive. But I think relatively, Nifty could outperform Bank Nifty because of IT names. Where if the long build-up, which we are seeing in the IT names, continue to move higher, I think they would provide support to Nifty index. But Bank Nifty would trade in a broad range. I think the range is quite large for Bank Nifty because after the recent run-up, the momentum readings there are a bit overbought. Support for Bank Nifty are seen around 47,400 to 47,500. So in case if we get any dips towards that support, then the risk-reward ratio could turn favorable to create fresh longs again in the banking index. And on the higher side, I think 48,500 would be the first level to watch out for, where resistance would be there, and positionally 49,000 could also be expected. But immediately, if I look at a very short term, then I think it's a very broad range which could be seen, 47,500 to 48,500. So if we get any dips towards the support range, then only I will advise going long in banking index, where the risk ratio could be favorable. But for now, I think outperformance should be expected from Nifty compared to Bank Nifty because of supports from heavyweights such as IT, Reliance, and others.
Right. Ruchit and Osho, stay with us. We'll take a quick break. We'll come back. We'll track the markets and bring you more trading strategies. Stay tuned.
Welcome back. This is the F&O Show. A quick look at all those stocks once again, which are in fact looking at increase and a decrease in open interest. Let's pull that list again. Let's start off with those stocks which are in fact seeing an increase in OI. And today's day of trade, and whether or not there has been substantial change, not really, but we are seeing Metropolis, Zydus Life, Lupin, Ipca Laboratories. In fact, a lot of them are from the healthcare space. Besides Moil, of course, all of them are advancing in trade. That's where their underlying is moving up. And we are seeing an increase in OI. Hence, fresh longs. What are stocks which are seeing a decline in open interest? Let's pull that list up as well. And we are seeing longs unwinding in Bharat Forge and India Cement. On the other hand, looking at fresh, or pardon me, short covering in Coforge, TCS and Biocon. Keep an eye on these stocks as we move in. But let's, on that note, take a look at what our experts are recommending. Or should I come back to you on this one? You have two buy calls today, one on Tata Communications and the other one on Voltas. Can you take us through these?
Yes, definitely. Firstly, I will be talking about Voltas. If we will be seeing the technical structure in Voltas, then in the recent period, we have seen a strong breakout from the zone of 845, 848 levels. And from there onwards, it has surged on the higher end. Again, it has witnessed some kind of correction and retested the neckline of the breakout. Again, it is gaining traction. So that means it has provided ample amount of trading opportunity in the current counter at the current levels. So one should try to accumulate Voltas at current levels. Nearly 860, 865 is the zone for accumulation. On the higher end, one can expect a decent target of approximately 890 in the coming period, while the support stays near 847, which is the breakout zone. So 847 should be kept as the stop loss for the target of 890. Now the second technical pick is Tata Communication. Tata Communication, if you will be seeing the daily chart, then it has seen a very strong upsurge from the 50% retracement of the fall in the previous week, and it has gained strong traction from there onwards. So 1800 is the near about zone where one should try to accumulate this counter, keeping a strict stop loss of 1750 for the upside target of 1900 and even followed by 1920. So the targets are quite aggressive in Tata Communication looking at the overall technical setup, but one should definitely try to gauge this momentum in the coming period.
Right. Ruchit, you've got a couple of buy calls as well, Reliance Industries being one of them. The stock is trading firm this morning, but let's not forget that it's been an underperformer over the last couple of months. In fact, it's only done 3.5% in the last 3 months. At these levels, RIL a buy call?
Yes, Samina. So, if we look at technical structure, then a gradual high top, high bottom structure is there in place. I was just looking at the options data as well, where the stock has surpassed the 2400 mark, 2500 mark, and those call writers are running to cover their position. If you look at today's move, then 2500 call in call, 2500 call option, about 10 lakhs open interest decline has been there. Still around 35 lakhs open interest is there. So still a lot of short covering still could be there amongst the call options. So I think whenever you see such combinations of short covering along with fresh long build-up post the breakout, such stocks can continue to uptrend. So I think Reliance Industries, that's why it's my one of the pick here from the F&O space. One can go along with stock below 2490, expecting first target around 2570, then positionally around 2600. And similar, my second pick is a buy call in IEX. So again, you may say it's a relative underperformer compared to what we have seen in the markets. But if you look at December series activity, then at the start of the series, we witnessed a good long build-up in IEX when the stock rallied from 145 to 160. So fresh long build-ups were seen during that time. Last 6 or 7 trading sessions, some pullback move has been seen, but neither those longs have been unwinded, nor we have seen any kind of short formations. So those long positions still seem to be intact in the system, and that's why as we approach closer to the monthly expiry, I think we would see another leg of up move in IEX from current levels. So post this recent consolidation of last 4-5 days, I think the risk ratio is favorable there too in IEX. So one can go long in IEX also, keeping stop loss below 150, expecting targets around 160 first, then around 164.
Osho, we're running out of time, but very quickly, if somebody wants to look at metals, any sort of metal name on your radar that one could still initiate a buy call on or a trading strategy?
See, overall, Jindal Steel is looking very positive. If I'll be talking about the technical chart for Jindal Steel, then it has seen a very strong upsurge. Jindal Stainless Limited, I'm meaning, because it has seen a very strong up move in the recent period, and it is hovering near the 52 weeks high. So from here onwards, it still has the potential to go towards the zone of 572, 575 on immediate basis. And if I will be talking about the support zone, then the support lies around the zone of 525, 530. So from risk reward point of view, it is approximately 1:1 kind of a ratio in this counter, but overall the trend is very positive and it is continuously hovering above the 21 day exponential moving average. which again attributes to a very strong technical development. So one can try to accumulate this counter for the higher range of 570 to 575 on an immediate basis.
All right, well, that's the view coming in from on the metals package, Jindal Stainless. Let's once again quickly revisit what's happening in the benchmarks, and for now it's been a quiet day of trade, but remember that it's also the mid-cap Nifty expiry, options expiry. Now this is the one where we haven't really seen too much pickup in terms of volumes as far as your option markets are concerned, but it has seen a little bit of volatility, at least on an intraday basis, and after it has in fact opened up with losses, it has recovered, it seems, and at the moment it is trending marginally in the red. The question is, where do you see the expiry at the moment? Around 10,340 thereabouts. That's where the mid-cap Nifty underlying is trading at. And the question is that whether or not we can in fact see some amount of movements. For now, do remember that in the first 1 hour of trade, we have already seen a considerable depreciation in the option premiums for the mid-cap, the mid-cap Nifty index, and we're going to continue to keep an eye on that one. But that said, I'm going to take a moment to thank both our experts, Osho as well as Ruchit, for taking us through their views on the markets as well as giving us their calls. And on that note, we will shift focus to Syngene International, where the company has now forayed into manufacturing, and my colleague Neeraj Shah caught up with the CEO and MDO of the company to understand the path ahead for the company. Listen in.
Thanks for tuning into NDTV Profit. I'm Neeraj Shah, and we're talking to a business, or there are businesses which are in a state of transition despite having achieved significantly in the life cycle. And Syngene is one such business which has unequivocally been a leader in the biologic CDMO business, and now they are transforming themselves into not just a CRO, which is a contract research organization, but also into manufacturing CDMO, that is, in a meaningful way. And to talk about how he sees Syngene moving from what it is currently to what it could be a few years down the line after having finished 30 years of their existence is Jonathan Hunt. Jonathan, great having you. Thanks for taking the time out.
Yeah, it's a pleasure to join you.
Yeah, and Jonathan, congratulations to you and Team Syngene. 30 years, I presume, is a momentous occasion, but I'm guessing you're looking forward to the next 30 already.
Yeah, I mean, it's worth taking a moment of reflection and enjoying some of the sort of progress we've made over 30 years. We certainly took some time last week to celebrate that and enjoy it. It was a pleasure, actually, how many of the very founding staff are still with us. I mean, they're a little bit grey-haired, and they've been there quite a long time, but it's a pleasure to sit down with some of them. And they've seen so much change and transformation. Okay. I wonder what the next 30 years will bring.
Is heading towards the patient from an investors and a shareholders perspective, which a lot of our viewers would love to understand what kind of business opportunities and challenges does it bring for an organization which has been, in abbreviation terms, a CRO, but moving to a CRO plus CDMO brings?
Yeah. Well, there's multiple dimensions to that. I mean, there's the natural workflow. You hand over from discovery research scientists. As you move closer into the development manufacturing piece, the reproducibility, the rigor at which you operate. If you've ever been around a lab or you've ever been around a manufacturing plant, you can almost in your mind picture the difference. Often in this, the scientist's office is a million ideas and almost as many papers and research. It's about how do you bring together all of those ideas and think them through. Manufacturing environments tend to be highly regimented, a place for everything in its place, and you have to bring that operational and industrial rigor. And in our industry, almost more than any other, but certainly the match of any other, you overlay a regulatory framework. The FDA in the US, EMEA in Europe, the Indian regulators, the Japanese, many, many regulatory bodies around the world. place a high degree of control and rigor around how you operate in the manufacturing environment. So you've got to be able to do both, and that means that you need different skill sets, different processes, different systems, and that's part of the evolution of Syngene. It's one that I think we're doing well on. Evidence for that, even in the last year, we've had 2 of our manufacturing facilities pass their first ever inspections by the US FDA. That's quite a seismic event for any business getting to that standard. We now have the same regulatory status, I think, as any and all of our clients, with our ability to manufacture to the very highest regulated operating standards in the world on both small molecules and large molecules. So we're building that track record, we're building the underlying capability, and that allows us then to offer something that's of real benefit to our customers, which is to flow seamlessly from the research work that we've done for 30 years for them and take that project all the way through towards the patient. That means you can be a bit quicker. And in an industry that's patent bound, it's time limited. You know, every single day counts about getting to the patient. I think there's a moral imperative. If you've got a good product, a good medicine, getting it to the patients as quickly as you can is a good thing from a societal point of view. But our customers are also very, very conscious that time lost in discovery and development is time off their patent clock, makes a big change to the economic value. So having those things in one integrated organization allows you to move quickly towards the patient, and it allows those learning loops between the different stages, the feedback loops in how you do work, to get you there quicker in a better risk-managed way.
And with that, it's a wrap on the F&O Show. Stay tuned to NDTV Profits for more news and updates.